right, you guys. Welcome everybody. Crypto Monday, San Juan. I have two special guests in the house. One of them is the Don Corleone himself, the Godfather of Crypto, my friend, my mentor, Mr. Michael Terpin. Give him a round of applause. If I am louder than you when I ask you to give me a round of applause, me and my guests are leaving, and I'm gonna have them teach me how to make money and not you. So let me get a round of applause for Mr. Michael Terpin, please. Perfect. If you don't know who Michael Terpin is, you need to Google him. Bottom line, Terpin speaks here a bunch. He is literally, honestly, I'm not saying when I say he's the Godfather of Crypto, I mean the brother's been responsible for marketing 60% of the value that's on CoinMarketCap. If you don't know what CoinMarketCap is, go on CoinMarketCap.com and you can see that's how we keep track of all the value of all the majority connected and a very honorable friend. With that being said, this brother, and I would have you introduce yourself, brother, but I think everyone knows who you are. This brother over here is Mr. Keith Jensen. Give him a round of applause for Mr. Keith Jensen. So Keith is a guy that he's not so, ingratiated into our industry. At least he's, not very Tom's a long length of time. However, when he makes his mind up about something and he wants to go in, he goes in hard, that's for sure. Keith's got 30 years experience in trading options and futures, not to mention he's also a successful attorney fighting Big Pharma. Let me get a round of applause for him suing Big Pharma and winning. And I gotta tell you, Big Pharma's got a lot of money because I've been to his house and it's fucking huge. So honestly, so I'm telling you, Big Pharma, we need to get some more lawsuits from you guys. With that being said, Keith, why don't you tell us a little bit more about your background and how you got into options and trading, sir?
Thanks a lot. Thanks for having me here.
You gotta talk to the microphone, Keith, so they can
thanks
hear you.
a lot. Thanks for having me here. I am a 30-year attorney, slightly different on options trading, probably about half that time. So the first half of my career, oversimplified, was almost exclusively class actions, and the second half of my career, again, oversimplified, was almost exclusively suing pharmaceutical or drug companies. And I always invested throughout that 30-year period. It ages me to say that miserably. I pretty much retired from the practice of law about 5 years ago. My beautiful life partner, who's here in the audience, would argue whether I'm retired or not as an attorney. We have that debate all the time. She's an attorney, and I'm smart enough to let her win that argument all the time. So I guess I still practice law. I started race car driving. I did my first race in 2015 and completed over 170 car races. So I actually came to Puerto Rico, believe it or not intending to benefit from Act 20 or 22, because I was retired. I never intended to work again. As my racing career was trailing off for different reasons, I started more aggressively options trading, and I made up for lost time. My sad excuse for why I didn't get into Bitcoin earlier than I now am, and I'm a huge Bitcoin bull for, I think, likely the rest of my life. I read a book called Cryptocurrency in or about 2015, and ignorantly, stupidly, I finished the book, told my life partner about it, and then opened a racing book, and then I think we went to a racetrack somewhere in America the next day so I could do one of my 170 races. In other words, I wasn't in the investing mode, I was in the retirement mode, and somehow that's morphed back into the investing mode, which I do often in the crypto space, and I believe that, as you all know, that Bitcoin is a valuable asset. It's a life raft for the equalization of the hard economic times we find our country and the world in, and it's an important equalizer for people who don't have the financial capacity, which many people here have, to be able to either have a life raft or a buoy or a support mechanism to financial prosperity. And it is perfect money, and the only question is what percent of my liquid net worth as I go on I will get in going forward. And if I could have one more second, I'd say this. My life partner and I decided on Christmas that I would give 16 nieces and nephews some Bitcoin, and their average age is 20. And I did that, and I'm requiring them to now listen to me, probably boring to some of them, speak about the financial history of the world, investing, inflation, recession, hyperinflation, the risks of all these things to our economy, domestically and internationally, and how Bitcoin prominently plays in to all those narratives. So it kind of gives you a perspective of who I am and what I'm trying to do with my family and hopefully now all my new friends.
Next time we ask the brother to tell us a little bit about his background, we got to give him a short version. I mean, maybe like a 3-sentence bio. That's got to be like one of my pointers for when I tell people like, hey, you know, let's get you tell a little bit about yourself, you know what I mean? To get this little short version. No, but like, listen, Keith is impressed me. You know why? Most people don't change what they do in their lives when they're professional. Very seldom, right? Keith's done so a couple of times, right? So he went from an attorney to a race car driver. Kind of, you know, a race car driver. But then more importantly, now he's a very successful trader. And I know that because I had lunch with him and another very successful trader. And the other successful trader was, and the guy that he had lunch with, that's all he does. And that's what I mean. When someone becomes elite at something, they generally don't switch lanes. They usually stay in that particular field, and it's very seldom they jump lanes. So when I found that out about you, I was immediately impressed by, you know, the wealth of knowledge and also to the amount of success that you're enjoying right now. I'm sure the bull market has a little bit to do with that. I tell you to be careful, right? But I'm sure you understand market trends. And the good part is, you know, we're going to be safe in the bull market for a little bit now. So now, let me just jump back into the conversation of what we're talking about. How many people here know what Wall Street Bets is, man? Raise your hand, make some noise, give me some love. All that didn't make any sense. I know you got your hand in the air, you're trying to figure out how to clap your head. But nonetheless, Wall Street Bets, right? Wall Street Bets is what's going on right now. So let me just give it a little brief synopsis on it. A couple guys on Reddit get together, and I actually read the initial post. I don't know if you guys had the opportunity to, but I read the initial post. I can't remember. I wanted to shout the brother out because I thought it was flawless the way he wrote it. But nonetheless, the initial post on Reddit was very simple. It was essentially a guy just basically telling the forum of Wall Street Bets, hey, this is going to happen. It's going to happen whether or not you're involved in it, but I'm going to explain to you how this is exactly going to happen. And if I'm you, I would take advantage of this because I am going to take advantage of it. Now, I want to reiterate, this is going to happen whether or not you do so or not because it's mathematically impossible to stop. So essentially, what happened is GameStop, who, if no one's familiar with GameStop, I don't know where you grew up at. GameStop is the store right by the mall, or maybe even in the mall when you grew up that you used to buy video games at, right? And obviously, retail stores and hard console video games are obviously not two industries that are exploding right now. The pandemic had some influence on PS5s and the new Xbox console, but ultimately, people are looking more to mobile devices and laptops and tablets and things like that to actually get their gaming fix on. It's very seldom you see people buying consoles. The numbers are going down. Those industries are essentially they're facing a hard time. So these people who are hedge fund managers, they essentially are able to short the stock. And what that means is essentially they borrow stock that's been allocated from this asset, and they're essentially betting that it would be valued at less than what they're borrowing it at, and they will then in turn purchase it at a lower value and essentially eat the profit. The problem was they over leveraged themselves, and it was very clear mathematically that they shorted, I think, 140% on paper of what the allocation of the stock was. So essentially it was mathematically impossible for them to cover. And some really smart guys on Reddit got together and figured out that these hedge funds did this. So when they did that, it didn't take much. But the fact that they got so many people behind them and they had such a large forum with the Wall Street Bets, I'm sure it helped. There was a guy by the name of, there was one guy who placed a lot of money on it. He did it when the stock was like $4 or something like that. And he essentially just basically started to push. But what that happened is that exposed the financial services industry. And here's the real key to this, is these guys have been doing this forever. They borrow stock they don't own. And they sell it. I can't borrow your house or borrow your car and sell it. Why can I borrow stock I don't own and sell it? Especially if I'm supposed to be the institutional investor and have all the money. Hedge funds have a lot of money, right? We have some hedge fund managers in the house. I don't actually want to name them or point at them, but there's a couple in here. So yeah, hedge funds have a lot of money, and they don't need these advantages whatsoever. So essentially what happened is they were exposed, because what happened not only can happen for GameStop, but it can happen across the board on multiple other avenues and multiple other assets in different asset classes. So that's what we're here to talk about. So first and foremost, I want to get Mr. Terpin's opinion on Wall Street Bets and basically what he sees from the Wall Street bets and how it basically maybe potentially could impact the cryptocurrency markets?
I mean, I was a stock guy before crypto, and then I said, you know, fuck it, this is much better. But the point is that when I was a stock guy, I mean, I used to, like, you know, listen to all of the, you know, the Jim Cramers of the world, and, you know, some of the folks like that. And I remember he would just rail about, you know, how naked short selling used to be illegal and it really should be illegal. And this just exposed it. I mean, if Gensler comes in and doesn't sort of go back to a new regulation, he's Mr. Regulation, by the way, which I actually think is fine, at least to have clarity. I don't want to have over-regulation, but, you know, he did like 63 different new regulations when he was the head of the CTFC under Obama. Whereas, like, as far as crypto goes, you know, Clayton did 0 because he just simply was a prosecutor. I don't think he knew how to write any legislation. He basically did what they call, you know, regulation by enforcement. Hey, we're going to take a law from the 1940s and, like, apply it toward digital assets. Oranges, wine, yeah, you can figure it out. I'm arresting you. You know, you go and, like, you try and fight us for 5 years and we're going to seize all your assets. Or we'll just settle and you can say that we're right and you're wrong. And he just did this for, you know, all this time. And that certainly didn't help the economy. It certainly didn't help the industry. If they'd done it to the internet, you know, there'd be very little American internet companies. Instead, they'd let the internet thrive. So I'm getting a little off topic there, but basically, if I was Gensler, I would come in and I'd basically say, damn, we got to get rid of this naked short selling. This just exposed, you know, unfair behavior in markets that does not protect the little guy, that just basically should be stopped, and we should go back to the way that it used to be. Now, there will be other people saying that the guys you should be going after are the people who were at Wall Street bets, that they were manipulating the market, that was insider trading. There's a really nice, like, long piece, I think it was in thestreet.com, where someone said, it's not really insider trading if you basically take information that everybody already has and you just tell everybody to act on it. So you could perhaps say it's manipulation of some sort, but this is gonna, this raises more questions than it answers, and there are questions that need to be answered both by regulators and just by the general population. And I think it's the beginning of technology really speeding ahead, if it isn't already, regulation. And fortunately, I would hope that Gensler and Tarble are up to the speed, because Clayton and you know, Chris G definitely weren't.
Yes. Testing. Okay, unfortunately, I had a mic issue. So yeah, I just wanted to comment on a couple things you said there. Number one, first and foremost, is in terms of the regulatory uncertainty, and really it's only one section of the demographic that's really saying, hey, these guys are guilty and they want to do something. And that's going to be, you know, like NASDAQ CEO, right? Robinhood CEO, and all these hedge fund managers that are essentially losing their money. But other than that, you know, from my perspective, if they're going to claim that what's going on with Wall Street bets is manipulation of the market, then they're guilty of it. And that's where the conundrum lies right now, where we are as a society. As more people actually understand what happened, and they realize that this has always been happening. It's always been happening for the other team, not for you, the retail investor. So for us now, or any portion of society, to say, hey, we need regulation to stop these guys on Reddit from manipulating the market, then why the fuck didn't we have regulation to stop the hedge funds from manipulating the market? And how is it they're legally able to do so, and have been legally able to do so, I don't know what, since 1932? I don't know, when the shorts created.
Let me start with Gary Gensler. I think a lot of you will find it interesting that Gary teaches a graduate level digital currency class at MIT. All the analysis I've done of who he is tells me that he will, for example, likely approve what's now the 8th pending application for a Bitcoin ETF, which is overall very positive for the space. I think he will be a strong leader and a strong regulator there, and provide clarity. So I think that's really good for our future in the 4 and maybe 8 years or more he's there. I agree with everything Pedro said, but I'm going to take a different perspective on short selling. But before I do, let me explain a dynamic that if you don't understand, I think is critical to understand the Wall Street Bets Reddit now less than 10-day-old phenomenon that I think is here to stay, which we can define as cohesive trading taking on, in the instance of Melvin Capital, a $12.5 billion fund, and potentially bringing it down because of its over-leveraged short position. Let's start out, and I am actually going to talk about some regulation, believe it or not, that's all pro the individual investor, all pro the Wall Street guys, all provides them the ability to have more, importantly, market transparency. The point was made is 140% over borrowed the GME stock, which obviously creates problems, but the opaqueness of that, so funds are required in some instances to disclose in filings their long positions, but are not required to have any transparency regarding their short positions. And it was ingenious of the Reddit group to target GameStop, BlackBerry, Bed Bath & Beyond, and AMC because of their correct conclusion that they were over borrowed. The first piece of regulation I'd throw out there is that if there's that hedge funds, which in large part their over-leveraged positions brought down our economy near to the brink in the financial crisis of 07-09, they should be limited in how much leverage they can have. Reddit is effectively applying no leverage to their trades. They're just doing long buys in unison. So I would ask Gary Gensler to seriously limit the leverage hedge funds are allowed to put our banks at risk at, and heaven forbid start another daisy chain like the one of the financial crisis. But now, why did they accomplish what they did with their relatively limited buying power? Two reasons: a short squeeze and a gamma squeeze. So most probably know that a short squeeze comes from an over-borrowed stock, and they have to buy stock to cover their position, that is, limit their losses as the stock is going up in price against them. A gamma squeeze has up to 100 times the impact on the price of a stock than a short squeeze does. Here's why. So an option is a call or a put. A call is a right to buy a stock at a strike price at a given expiry date. A put is a right to sell a stock at a given strike price at an expiry date. So when someone buys an out-of-the-money call, the market maker, generally not trying to take the opposite position, they're just trying to make money off the float, what they need to do, because they're now short upside risk. So that market maker has to buy stock. So put it numerically, every option contract gives you leverage over 100 shares of stock. So when you buy one contract, a market maker has to buy 100 shares of that stock to cover and make, it's called delta neutral, but think of it as price neutrality. That market maker doesn't want any risk. So he buys stock, 100 shares in this example, to cover his position. And as the stock continues to rise in value from a lot of things going on here. One, because Reddit's buying it. Two, because there's a short squeeze. Three, because there's a gamma squeeze, which I'm now defining for you. And four, because as the stock continues to increase in price from the first three dynamics, the market maker has to buy more stock to maintain his price neutrality and no risk in the position. Hence, the gamma squeeze can be up to 100 times more powerful than the short squeeze. And it occurs, and what I watched in real time, like I've never seen before in the last 5 or 6 trading days, is the amount of out-of-the-money calls being purchased was so fast, and it was often for the highest strike call, the farthest strike away from the money. And clearly these Reddit people were buying them so fast that it distorted the market of the options. By definition, a strike closer to the money costs more than a strike far away from the money, because it's more likely to be covered by the price if the price moves up. Obviously, it'll be covered sooner. They were buying only almost the highest strike, which still requires the market maker to buy 100 shares per contract, and they were going, 2,000, 3,000, 10,000 contracts at a time, and hence the gamma suites. You have all these factors jacking up the price of stock, and I checked before the close today. In the case of GameStop and AMC, we're talking 400 to 1,000% increase in the price of stock. So, having said all that, we have proof of a new paradigm in the market that we've seen in the last 10 days that I think will be here to stay. I'm not for a moment suggesting some of the people, many of the people perhaps, who are long the stock might not lose a significant amount of money if and when it starts trading on its fundamentals again, as opposed to these market mechanics I just discussed. But clearly, many of them are wonderfully making a lot of money. And I don't think there should be any regulation of that. And I think there should be liability, to Pedro's point. The way you clamp down on that is you create liability for any lender in the market who knows or should know that a loan they're about to make is likely to put any stock in a over 100% borrowed position. Two, in my view, the SEC has no authority to regulate these Reddit buyers because they're transparently, bravely out in the market telling everyone what they're going to do. It's called free speech. The SEC has posted 2 days ago, or maybe Thursday, a notice that they're well aware of this, and we all know they haven't done anything. In my view, they shouldn't, and really they can't. That's definitely not insider trading to be telling everyone you're about to buy and then buy. The problem is the hedge funds who get the better stick of this. If you wanted to further level the playing field and you wanted small investors to have the ability to invest in hedge funds, you'd get rid of the SEC accredited investor rule, which requires you make 200 grand for the last 2 years or be worth $1 million. Get rid of that rule to make it fair. But now to bring it back to how this could affect our space, the crypto space, I've seen posts, including today by Mark Cuban, and he said that the borrow rate on GameStop was 30% per annum. All you guys out here who are way smarter than I in coding and tokenization, I'm sure could come up with a product that could tokenize a short, because I don't want shorts to go away. I think shorts are an important price discovery tool of the market. I'm involved. I short stocks all the time.
But shorts are different than shorts at 140% of the stock available.
Completely agree.
And naked shorts. I mean, shorts have, if there were no shorts, then people would be able to get away with like complete bullshit pumps, right? You'd be able to have like end runs all over the place. And, you know, the legitimate use of shorts is to basically say, well, like, you know, John Paulson, who owns half of Condado Beach, you know, he made $5 billion. The movie, the Big Short, was basically about him. And it was an unpopular thing. His investors were all pissed off at him. He was like, you know, he's like, no, this is going to happen. You're not going to believe it until all of a sudden you see it. And then boom, billions of dollars in profit by shorting the U.S. housing market because he saw he read the actual contracts of what these things were doing. And now the guy who basically, you know, was sophisticated enough to short the entire U.S. housing market because of those you know, CDOs and all this stuff, you know, basically goes long, you know, unleveraged in buying land here, and he was right because he got it really cheap a few years ago. So I think that what this really means in terms of going forward, shorts will stay. I hope that naked shorts go back to where they used to be, which was illegal. Shareholder activism meets crowdfunding.
I got beef with a lot of things that was said up here. Hold on, first and foremost. As the only guy up here that's the little guy between two guys that are smaller than me, as the little guy up here, I'm going to tell you this straight up. Shorts all the way around the board should be illegal. You know why? I should not be able to bet and make money if your fucking company loses money.
No, they should be legal because, again, it keeps people honest.
How is it
not leverage it?
I don't think you should be able to leverage either. I think both sides. I don't think you should be able. This is how. If how many people in here traded with options before? If you've ever traded with options, even at least once, put your hands up. Now, watch this. Now keep your hands up. Keep your hands up for me. I swear to you, watch this. How many people have made money trading options? Okay, all the rest of you guys need to come teach me how to do this because I'm damn sure not making money losing options. Most of the people that I know that trade options, with the exception of all the brainiacs that are in my crowd, obviously, I'm just saying most people lose money. The overwhelming majority. Most people do not know what they're doing. It's a real easy way to lose a lot of money is with options trading. Real easy way to lose a lot of money. Now, the only reason why it happens is because you're literally allowed to bet on money that you don't have. I don't understand how that works. That's a whole other conversation for another day. But when we talk about the shorts and why the shorts, in my impression, should not be good for anybody in business, is because if you as an investor or as a business person recognize a business that is not going to make it and there's an opportunity there for you to create a solution for something that would, put your money in that. Don't make money off of this guy losing money, because that's going to force out, that to me, it has like the potential for other people to bet on it and to push, right? And if you have the ability to make money on me losing money, right, and you think it's a higher probability than you betting on me to make money, then you do that, right? And the other way is actually more constructive to society, in my personal opinion. Now, with that being said, there was one other thing you said, the accredited investor rule. I think that's huge. I've been talking about this, and you know, because we've talked about this before publicly. The accredited investor rule basically stipulates that you have to average about $200,000 a year in income for a single person for 2 years consecutively to be considered an accredited investor. Now, there's a couple other ways to qualify, but that's usually the easiest, right? The challenge with that is just because you make $200,000 in 2 years consecutive doesn't mean you know shit about investing. Bottom line, it just means you got enough money.
Chance Barnett, who started Crowdfunder, now has a bank in Bermuda, called it the rich people are smart and middle class people are stupid law. It's ridiculous. And what I like to say is,
I agree.
yeah, I mean, what I like to say, I mean, it's actually the protect the rich from the middle class.
That's exactly what it
getting
is.
a leg up rule.
That is literally.
And if there was ever a justification in the beginning, talk about something that's not time dated, it was because in the early days of Wall Street, when it was literally a street in New York City, you had people like going down there and selling stock that didn't exist to widows and orphans.
100%.
And there was no way to know whether it was real or not, right? And that today with the internet,
It's antiquated. These are antiquated laws.
These are antiquated laws. And they had a chance to fix it when they ended up doing the Jobs Act, and instead they added so many more things that nobody in the right mind would go through the Jobs Act.
So who's in the SEC right now? Is the SEC chairman?
The new one is Gensler.
Gensler. Somehow or another, I know my videos reach you. I've had some of your goons in my crowd before. I'm sure you're gonna send some more goons down here to Puerto Rico to visit us soon. This is easy, simple. Two things. Number one, first and foremost, you have to ridiculously remove this accredited investor label. It should be simple. You know how simple it should be? A course on the internet that you take. You should become educated on what all these topics are, of what all these different types of investment vehicles are.
Like a driver's license.
Very simple, just like a driver's license course. Everyone should have access to it. It should cost like $30. It shouldn't be expensive. Reach out to me. I have people that can build this program to you for pennies. They would love it. Honestly.
No, and I'll tell you, coming from a pandemic and a basically, you know, a recession, depression, I mean, what better way to create great wealth than to let smart middle class people invest in things that can make them 10 or 20x instead of 0.6% on the T-bill?
I agree with everything you said, Michael. I love you, Pedro, but I disagree that shorts should be on shorts. Here's why. No, here's why. If you got rid of shorts...
The irony of that is I'm wearing shorts, he's not. But
if you got rid of shorts, you'd also be getting rid of all puts. And a put is a call, and a call is a put. There's a way to put on shorts with calls without puts. So there'll always be a way, unless you got rid of all options, to go short a stock. That in mind, the reason why shorts should stay is because I said they're important price discovery, and here's why. There are companies that are destined to failure or should be. A healthy economy requires companies to fail. One of our biggest problems right now as a society with all the QE printing is that we're creating zombie corporations that are by definition no longer can be valued based upon any fundamentals because they're too big to fail. But if you're asking for regulation to protect a little guy, Mr. Gensler, you should do this. In the last 5 trading days, a number of different brokerage houses, including Robinhood and others, have prevented completely or limited their customers from buying more than one, or in some instances any, of additional game, BBY, BB, GME shares, because they just decided to shut them down. Thomas Petterfree, the founder of Interactive Brokers, said in part this was to protect the market. He was concerned about IB's risk. Well, he should be at least a fiduciary to his customers, and here's there's a number of problems with disallowing that. One, they have the right as intelligent investors to buy whatever they want. Two, it potentially prevents them from covering their calls that are in the money. When you have a profitable call, and you have to exercise it by coming with cash or shares to exercise that call. If you prevent that, you're potentially allowing for theft by the brokerage house to the customer. So people should never be prohibited from taking their own intelligent actions, and I completely agree. It should be like no different than approving your no different than a portfolio margin account for an options trader. You prove that you're sophisticated enough to be able to handle your own finances, and then you should get to trade your own money.
So an example of why it's ridiculous to say that you have to have certain qualifications, 200,000 income for a couple of years, or $1 million in assets above and beyond your home, et cetera, which by the way hasn't been moved for inflation at all, is that here's another thing that people can sort of quote unquote invest their money in and not have any regulation at all. I lived in Las Vegas as my primary residence for a number of years.
He got the Tyson home. He got the Tyson home. The one with the lions in the backyard, he has the Tyson home.
I did buy that during the last Bitcoin run-up, yes. But you can go in and without any accredited investor status, you can go and take every penny that you own and put it on red while you're drunk. They're applying you with drinks and they're telling you win, 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 win. This is not illegal. And yet, going and knowing somebody whose sister worked at a hot startup that was called Facebook, say, a few years ago. I mean, there was a guy that got stock who became a multimillionaire because he got shares for painting, a mural or something like that. So these things.
I met a little guy named Brock Pierce at a coffee room in a hotel. That count? It's kind of like the same thing. It was like a stock tip.
Well, I was gonna say the point is that people should be able to make up their own minds, and if they choose to go. And you can't sue if you made the wrong bet, if your startup was a scam or whatever. But the point is, you should have the ability to do that. Just like hey, I'm hot at the tables. Nobody stops and says, whoop. The SEC of gambling is going to come in here. You're already ahead. You got to walk away. You're drunk.
So I just want to add this one last point. I got to open up the floor for questions. But here's the thing: when ICO crazy, you should know because damn, we did a lot of them. Like 250.
They're coming again.
And they are coming back.
They're not called ICOs now they're called IDOs.
Whatever. They just basically were selling magic internet money that we made and you buy. So basically what it is when this ICO craze happened, this is actually one of the things that I thought was absolutely brilliant, by the way. The fact that you can take, let's just say you got a kid, right? This kid is a really smart kid that lives in, I don't know, you can be from the farm in Idaho, you can be from the field in India, he can be from the slums in Jamaica. He can be from the Caseríos in Puerto Rico. But he's a really smart kid and he has an idea that creates a solution that can be impactful and it can be profitable. But he doesn't have any money. But he writes something called a white paper, right? And he proposes it to the public. And he says, hey, you guys, I think I can build this. And then you have really smart guys that actually are industry leaders that actually look at that and say, you know what, this solution makes sense. You probably can build this. Let's give you some money and let's see if you can do that. That's essentially what ICOs did for the whole entire world. So when this happened, and you had the ability to crowdfund from the world based on an idea that the public would have the opportunity to fund it, they still have value in it, I still think it's absolutely brilliant, and I don't understand why people want to regulate away from it. I personally think that people should be educated, and they should have reliable places that they should go for vetted deals, as opposed to actually saying we're going to restrict from people or create insane.
Because the guys who have the monopolies right now, the Goldman Sachs and the Morgan Stanleys, they don't want to compete against ICOs.
So what they did is they turn around. This is in the U.S., Mr. Ginzer, back to you. Come on back to me. All right, so check this out. So what happens is in the United States of America, right, you end up creating all these damn ridiculous laws that creates all these expenses and legal fees for you to set up your company here and for you to do business in the United States of America. So you have really smart guys like me that find really smart guys like him that know jurisdictions all over the world that we can set up for $10,000 instead of $200,000.
Well, you can set stuff up here, but you just can't do certain things. It's called regulatory arbitrage.
Right.
It's happened in other industries, but it's massive here because we are driving the best and brightest away from the United States.
Like me.
And
so what happens is exactly that.
And Gensler, if he's smart, will say, I mean, look, what better way besides the accredited investor rule? If you go and say, you know what, we're going to go and do some variation of the 3-year Safe Harbor Act that Crypto Mom proposed, Hester Peirce. They got to call something else because she's a Republican, so they have to make it a Democratic idea. But the point is that if you go and let even accredited investors or whatever it is go and invest in America instead of Bermuda or Cayman or Singapore, you're going to be paying 21, soon to be 28% tax. And people, a lot of them are like saying, oh, my Silicon Valley lawyers, I got my seed money from there. Yeah, they don't want me to go offshore. So what happened in 2018, 2019, I talked to a lot of really smart entrepreneurs with ideas that I knew if they went offshore, they'd be able, at the tail end of the ICO craze, to be able to raise 20, 30, 40, 50 million. And they said, you got to make sure that Wilson Sonsini blesses it. And of course, Wilson Sonsini, who's whose basically biggest check comes from the VCs, are like, no, you should just, too much risk, you go and get another round. And then the VC said, well, you know, your A round, it doesn't have enough profits, so they literally let the companies go belly up, and they sold them off for chump change as acqui-hires. And that's just wrong. And that wouldn't have happened if they were in France. That wouldn't have happened if they were any place else other than here. And so hopefully this wave, Gensler can do something where, look, what better way to put people to work and to increase the taxes than by saying, hey, we're going to let you go in, do your own research, and do Wyoming or, you know, hell, California for that stupid token sale and pay 28% plus 16%. But, you know, whatever, you know, the point is it's going to be a lot of tax money, and what's left after the tax will be a lot of jobs, and it's something that there's no reason to do other than there's two industries that do all of the campaign, funding. If you look at like who the biggest contributors are, Wall Street and Big Pharma. That's it.
So, Mr. Gensler, I want to shift my attention from you to someone else, right? Pedro Paralisi. Mr. Paralisi, why don't you get with Mr. Gensler and see if you can create what's known as a regulatory sandbox in a place called Puerto Rico, where maybe we can try out some of these laws and see if
he doesn't need Gensler. I mean, he can do what Wyoming did. Wyoming asked the SEC, and they said, we're not going to comment on that, and they went ahead and did their own laws anyway. We have the capability here, Mr. Perluisi, and I've actually talked to the people underneath him since the same party as Roseo and...
I have a feeling we're going to have him as a guest on Crypto Mondays soon. I'm not going to tell you guys when, and unfortunately, I probably won't be able to invite everybody, but stay tuned. We will get Perluisi soon, God willing.
Well, at least get Pedro Picard again, you know? I mean,
Picard we'll get for sure. Picard we get soon.
He's the guy who's going to actually write it and then hand it up the line to have Pierluisi sign. But when I first met Pierluisi, I asked him specifically about whether he was going to support cryptocurrency and blockchain, and he said, we need something in this island more than tourism and agriculture. I will support anything that brings business to this island that is of new technology. So there you go.
I mean, it's real easy, Mr. Pierluisi. Two things when you talk about regulation is right now Miami is winning when we're talking about siphoning talent from New York, LA, and San Fran. Miami's winning. The mayor of Miami, this guy's got swag, honestly. This guy's on social media. He's doing the damn thing. Pierluisi, you need to get your social media people to get with his social media people, and you need to emulate what he's doing on social media. You might not have the same level of swag, but at least you can try. So, and then in the process, more importantly than swag, what you can do is you can attract talent to Puerto Rico so we can build with them. We have all the money. Okay, talent, hey, Puerto Rico has tax laws that's conducive to guys like him and to him that they want to bring their money here because they don't pay any taxes. So we have all the money here. We want people here to build. And the only way that's going to happen is two things. Number one is the talent comes here, and also two, there's got to be some regulatory framework change that we'll talk about another day. That our tax incentives are more conducive to startups as opposed to actually companies that are profitable and actually paying their taxes. Because a lot of these Act 60 laws, they're only conducive to a company that actually has profits. If you're a startup and you're not going to be profitable for 2 to 5 years, Act 60 does nothing for you unless you're thinking long-term and exit game.
Act 73 basically does have research credits for R&D and
They're not big enough, especially when you start comparing them to some of these European nations that are doing huge wonders to bring tech talent and the kind of incentives that they're doing out there. Again, Paraluci, reach out to me because I've communicated and advised some of these governments and some of these roads.
Governor Paraluci, as you know, the introductory paragraph to Act 22 says that the tax models here are based on the country of Singapore. If you haven't visited Singapore, I'd request on behalf of Puerto Ricans that you do so. And there is no better place economically for this island to model, and no reason this island can't be everything that Singapore wonderfully is from a business standpoint.
We're gonna bring back regulation. We'll get some lawyers, and Mr. Mendez, one of our favorite lawyers. You guys, Geotax. Shout out to Geotax. He's our #1 sponsor. Where's my camera? Geotax. If you want to move your company to Puerto Rico, you holla at Giovanni Mendez at Geotax, and just tell him I sent you, and he's gonna definitely hook you up with the tax structure you need. But with that being said, back to regularly scheduled program. I got questions on Wall Street bets. We got questions for Mr. Terpin and Mr. Jensen. You.
In terms of regulations and letting just middle-class people investing in hedge funds, what I understood, having like qualified eligible purchasers was allegedly there to protect them, because the people that make X dollars could afford to take a hit. The average middle-class person can't necessarily. Is that way into what you're thinking?
You could say that's a rationale, the accredited investor rule, but I think Michael would agree with the following. The entire system should be based upon caveat emptor. What Wall Street Bets and Reddit just proved is that there's an equanimity of modeling data. There's an equanimity of access to data, as all you really smart coders out there obviously understand, as good as any potential one or two people can possess, that the best multi-$10 billion hedge funds can possess. So to presume naively and incorrectly in many cases that the average investor can't be as good or have as much or more edge as a hedge fund is factually untrue. And when you start with that factual untruth, the only next progression is let caveat emptor rule for investors. So education. Gotcha.
Well, and the other thing is, let me give my answer to that. A hedge fund can make the decision that your minimum investment's $1 million, and that'll rule out the middle class. Nobody's forcing hedge funds to do this. I mean, honestly, hedge funds love having accredited investors only. In many cases, some of them will do institutions only, because it's fewer people it's not worth it having 400,000 people on your cap table, and each one's calling up and saying, did I make money today? And so it's up to the individual entity whether they want to accept your investment or not. It's not a law that they have to, but there are startups. This will be more of a startup thing than a hedge fund thing. Although, quite frankly, I think that one thing that I'm a fan of, and I've seen this in the STO world. Brock Pierce, who, of course, is one of the more famous Puerto Rican, crypto folks to move here. And we've been friends a long time before we both moved here. We had offices a block apart in Santa Monica. He did the, people don't realize he's actually famous for three things. He actually did three revolutionary things in crypto. He did the world's largest crowdfunding of any sort, $4 billion, EOS. He did the first stablecoin, Tether. It was called Realcoin when he first started, then it became Tether. And he did the first security token offering, which was Blockchain Capital did a $10 million raise within a $50 million fund, where they said up to 99 accredited investors can go and participate that otherwise wouldn't get the chance. And I think that's a great model. In fact, a fund that I'm associated with is looking at doing that as well for their next fund, because what you're doing, and again, for right now it has to be accredited, but what you're doing is you're choosing to replace having a seat at the table to vote, because you would be going into an LP that is controlled largely by the fund, but they're going and letting 99 investors in who can then trade this thing on an open market. And so you're trading a voice at the table, which is probably not that big anyway, for liquidity. Everybody else just sits and holds for 7 to 10 years. I think that every fund, if Andreessen Horowitz and their new $1 billion fund, since they're very crypto savvy, came out and said, we're going to do 100 million and we're going to do 99 for I'd be the first one to sign up. you know, and so I think this is the future, and I think having the ability to loosen the accredited investor rule for startups, and again, they'll, you know, I don't know, if it's a class or sign up the thing saying, I really understand what I'm saying and I can't sue for this. Look, accredited investors sign all that stuff anyway. They're just presuming that if you've got that much money, you should understand what you're signing.
They're presuming they're educated in the space. So like Pedro said, the educational piece could offset that.
Yeah, because there's some people who inherited their money that don't know what the fuck they're signing anyway, but too bad, you signed it, you know, and, you know, again, you know, you have to go do your research on any investment.
Fair enough. Last question, I promise. So you guys are for shorts, which I agree with. It keeps the market safe. But what about naked shorting? Because from my experience,
I already said I'm against naked shorts.
Okay, good.
Pedro had to take a call, so he asked me to step in. Other questions? Unfortunately, you're gonna have to come up here because I'm tethered. I got 2 mics going on, so come on up here, and then you'll be second. We're good. Thank you.
Hello. Just cut to the chase. Mr. Terpin, what are your 3 largest DeFi positions, and do you have any small DeFi positions that you particularly like?
So I've been doing a lot in DeFi lately. Let's see. Largest positions? When I get in it or what it's worth now? I did pretty well with Bridge Mutual, which just went out this weekend. You know, I like stuff that is first to market in an industry or has a little bit of innovation. Bridge Mutual is, you know, is basically decentralized insurance. I think there's a great need for that. And the kind of like, the only player in the space who's got a couple of $100 million market cap, and I think Bridge is like 10 or 20 million cap even now after they've gone up quite a bit. You know, the number 1 player in the space, the CEO, got hacked for all of his coins. So I don't know if I trust their security quite as well as I do Bridges, and his personal coins. And let's see, other DeFi things. I like stuff in the gaming space. I'm in Royale Finance. That went up 5x when they listed, and I think they've got room to roll. And then for a platform, you know, Radix. I like Radix, and I think they've still they really haven't quite done the huge, but they're a layer 1. So not financial advice, but that's kind of, you know, what I had been looking at, and then got a whole bunch of exciting stuff coming up. Just getting tossed, you know, things left and right, and you know, that's sort of NFTs and DeFi. I think are like, you know, the most exciting things in the next 12 months. I think here's the thing with DeFi, and it also has to do with regulation. When the average investor, like say middle class, even like upper middle class, I mean, look, rich people don't even understand this. When they find out that you can actually make 10% on your money with minimal risk because somebody else is farming it for 30%, they'll say it's a scam. There's no way that happens. There's no way that can happen. Now, I think that, you know, the big challenge is going to be when all of a sudden APYs are not 40% because the market's going down. That's when shorts are really going to come in handy, because that's the only way that a compound is going to be able to go and, you know, find yield or you know, the other one I'm in that I like a lot is Yield App. I was like in a seed round and an advisor to Yield App, and they do exactly that. They go in and they say, you don't have time to go around and do all this hunting of like go in and like, you know, put some tether in compound and then take a coupon from that and like go and put it on Aave and then go with what? You know, they do that. They're making, you know, 30 to 45% regularly, and then they're paying you, I think their newest one, for a brief period of time, no U.S. citizens involved, can make 20%. You know, I mean, where else can you get 20%? And so I think that as these things become more regulated, I mean, Salt is one that I'm in. They are U.S. regulated. They're not up at 20% yet. Celsius is, you know, the founders in New York, but I think they're regulated out of foreign banks just because it's too expensive to do. Now, they don't want to be a bank. They want to basically be a DeFi, CeFi play. And they have a token that has gone up 100x in the last year, from 7 cents to $7. That's part of the interest that they pay is in their token. And they got $5 billion under management now. They launched at Coin Agenda 3 years ago. So it's a brave new world, but I think that we've gone from $1 billion to something like 25 billion in DeFi just this year alone. I think it's going to go up at least another 20x in the next year.
I have two questions. I'm like, what are the best crypto use cases that you've heard of? And also, what should Puerto Rico be doing for economic growth that it isn't doing right now?
Okay. Well, I think cut and paste what Kate and Lon has in Wyoming and make it a law here, because Wyoming people are flying to Wyoming because they don't even have clarity. The SEC said, oh, we'll get back to you, but they're presuming that the SEC, because they haven't prosecuted anybody under Wyoming law who basically got approved to do their token sale as a utility token, they're still paying 21% tax because they're not a security. Here they pay 4%, hello, and it's better weather. We would take all the business from Wyoming and probably half the business from the Caribbean. And I got a Bermuda company. I would lose money if all of a sudden that went through, but I don't care because I want to go and build the infrastructure here. I basically created my Bermuda to Puerto Rico company that's done a few crowd sales and has a few more coming up for stuff that I'm incubating, just to be able to solve that problem. And and it's just a drag that you have to go through like 15 different lawyers in 3 different jurisdictions and get the premier's cell phone number to make this stuff happen. Gensler with one pen stroke could cure it, and I think Pierluisi with one pen stroke could because as a territory we actually arguably have even less impact from the SEC saying they're going to single us out. And besides, AOC would come after his ass if he didn't go after Wyoming and came after Puerto Rico.
Okay, while we're getting the answer, please line up for questions, because a lot of you people probably can't afford time with them, and they're sitting here for free to answer questions. So if you've got crypto questions, you've got investing questions, you've got questions that they probably wouldn't even be able to answer for you, and they're answering here, that's amazing. So please take advantage of it if you can. Line up if you have questions. Go ahead.
I won't defend attorneys for being difficult to incorporate and move businesses down here, but it's a great question, obviously. What's the best for Puerto Rico economic development? And I completely echo the comments that Michael made, because we have the perfect opportunity for regulatory arbitrage on the island, because we all know the IRS has limited to arguably no jurisdiction over Puerto Rico's source income here. We are, but we're not. So we have tremendous abilities to negotiate a deal better than any state, and that's what all of us benefit from who are residents here. We have a deal better than any state can negotiate, and for the same reasons that the pharmaceutical companies, who I spent half my career suing, are down here in droves. I have many good friends who work there. Why was the second biggest employer on this island ever, second to the government of Puerto Rico, pharmaceutical companies? Because in the heyday, mid-70s, early 80s, pharmaceutical companies for drugs manufactured here on the island paid 7% taxes on the entire revenue stream of drugs fully manufactured on this island. So all it takes is innovative legislation like that to return to a position of attracting companies, especially high-tech, especially tech companies, especially crypto companies, and even getting the pharmaceutical companies back here. It's all a function of Mr. Pierluisi's ability to sign legislation to continue to attract companies, because he has the best bargaining power of any politician in the United States of America to accomplish that.
He's got me, and I got all kind of fly shit for y'all to do when y'all get here. And we got all kind of fly places to do it in. Puerto Rico's an awesome place to live in. Tax benefits aside from that, we got an awesome culture, awesome people, welcoming. Everybody is like family. If you moved here, right, because you felt like this place was home, make some noise. I don't care. I'm a New Yorker. I was born and raised in New York. I lived in Miami for 5 years prior to living here. Spent plenty of time on the West Coast, San Francisco, LA, Vegas, Texas. There's no other better place in the world right now than Puerto Rico for a variety of reasons. Not only you have the tax incentives that make sense from a business perspective, but keep in mind, tax incentives call a certain quality of individual here. And what you realize when you look around the room is you realize that you're an all-star on a team of all-stars. and then the kind of business that you engage in, the collaborations that you have, and the kind of friends that you make, and then the backgrounds, right? So you deal with people from bi-coastal, and they have a large network of people and business associates in their respective fields. And the thing about cryptocurrency, it's a new field. So you have a guy like Michael Terpin, even though he's an industry legend and veteran, he has a career prior to crypto. And that career is something else that comes in advantage when you're doing certain projects that are also in that field. So when you look around and you have all the kind of opportunities you have in collaboration, you have the best weather in the entire United States, right? And then you have all the kind of tax incentives and all the kind of building that we can do moving forward and a collection of talent. I see that we have a perfect storm brewing right here in San Juan, Puerto Rico, and extends obviously to the rest of the island. So, we have any more questions from the audience? We got this one guy right here. What is your name, young man?
Hey, I'm Steve from Sequick.
Where?
Sequick.
Where's that?
We are based in Miami.
Oh, Secret is the company?
Yes.
Okay, which means Secret is the place.
Okay. For anyone sitting on crypto gains, what do you suggest in terms of rolling them over into other projects or strategies, or any advice on that?
What was the question again?
For anyone sitting on crypto gains, coin appreciation.
So you're in Miami and you're not a Puerto Rican yet?
I thought he said crypto days. I was so confused.
Games.
I was like, what is he saying?
So you're in Miami. You're
Move
not
to
in
Puerto Rico.
yet?
Easy answer.
Yeah, I was gonna say move to Puerto Rico. You can still do it this year, and you can still. Miami's the perfect place, by the way. So this is Secret the blockchain. You said you were with Secret? Oh, Sequence. Oh, sorry, I thought Secret, because there's a blockchain called Secret that one of my companies that I'm working with is building on. So I'll be like, oh, you're with Secret. I don't know. Founder of Secret is a secret. I'm not sure. At any rate, it's actually a fork off of Cosmos, but privacy based. So if you're, obviously, the nice thing about being here and you have crypto gains, and what people don't realize is that, you can move here anytime before like July 1st and still have your gains going back to January 1st count as zero, because basically you just have to be here 183 days a year, but 30 days out of the U.S., like anywhere in the Caribbean, Europe, whatever, counts. Tougher to do this year with the travel restrictions. And 1 minute a day. And 1 minute a day with my other place is Vegas.
You're not part of the
it
video,
takes
so you're
9
good.
hours to fly, but there's no non-stops.
There you go.
Miami's 2.5 hours, so you literally could be in Miami, twice a month for like 3 days at a shot during the winter and the spring, and it only count like 1 day against you. You could spend 6 months here, 6 months there effectively, and still end up being a bona fide Puerto Rican resident if you check with Giovanni and all the tricks. But then what you do is you compound your gains. I mean, you save 40%, that's 40% more to invest. However, if you're stuck in Miami and you're not going to come here, you can look at opportunity zones. That means you can take your crypto gains, and instead of paying taxes on them, you defer them 10 years, I think it is, by putting them into an opportunity zone. They're all over the United States. A lot of them are real estate projects. I mean, my wife is in real estate. Our original deal was like, we'll do 50% real estate investment, 50% crypto. Unfortunately, the crypto just grew a lot faster. So she's like, sell more, put more into real estate, put more into real estate. So that's why we own the Mike Tyson Mansion in Vegas. And sorry about that.
I would provide you a little more conservative legal advice. Michael correctly stated the presence test. So there's 3 tests you need to be a Puerto Rico resident. The president's test, the tax home test, which are both black and white analyses. Tax home asks you're at CPA. Then there's one that's not black and white. It's called the closer connection test. And you could hypothetically lose that closer connection test if the IRS so asserted that even though if you were here for, pick a number, 300 days, if your children go to school in Miami, you have 2 houses there, you just have an apartment here, you have 4 cars there, 1 car here, you see how the argument goes. The argument in that case is you have a closer connection to Miami or Texas or New York, wherever it is, somewhere closer than your connection here. So my legal advice to everyone, whether you're paying me or not, is that you do not rely on anything close to the 183 day a year test, and that you be an actual, real, full-time citizen of this island, which requires that.
Another question.
It's also called the teddy bear rule. Where's your teddy bear? And yeah, I mean, Yes, I say I have stuff that's investment properties in Vegas, but we own 2 homes here. We spend over 200 days of the year here. I got my wife, my dog, my cars, all that stuff. So yes, you have to go and do that. But I will say one thing: it's usually not the IRS that comes after you; it's usually the state. And Miami doesn't have taxes. California and New York will hunt you down if you're anywhere close to not being 100% clarity on the teddy bear test.
All right, so we got another question here. Go ahead and introduce yourself and say how long you've been here.
My name is Brendan Kittredge. I've been here 1 week, and I'm actually, funny enough, with Secret Network, who you just mentioned. So, prior to asking my question, I'm curious what project you have that's building on our network.
I don't know if it's been announced yet. It's out of Denmark.
Okay, all right. Well, we'll wait on that one. But my question was, you've mentioned ICOs and crowdfunding and things like this as great alternatives, and you're an early stage investor yourself, and I know you run a PR company. So my question is, for founders of new projects and things like this, where there's a ton of pay to play in this space, and it seems like you need, tons of marketing budget and things like that to get attention in a very crowded space, what advice would you give to new projects trying to get awareness of VCs, investors, get funding? It just seems like a crowded space, and I'm wondering what advice.
Well, yeah, there's a lot of things to I mean, first of all, it's personal responsibility to make a brand for yourself. And so Transform has got a number of divisions. Transform PR is the PR division that I'm probably best known for because, we did so many projects, but really for at least the last 2 years, I've been spending much more of my time in advisory. I turned over the wheels to the reins, whatever it is, to the PR firm, to my president of the PR division, who's out of San Francisco, and I basically, other than advisory clients, when they ask me to come in, I just check in with them 1 hour a week to see that everything's going fine and make sure we're making money, and I give them a lot of new business from my investments and my advisory things to say, I need a PR firm. But at any rate, I think that for investors, for media, for anything, it's up to really the founding team to be organic. You can use a firm to help you, like with arms and legs and with strategies, but it's your responsibility as the founding team. Go and see what investors you want to be in your deal. Follow them on Twitter. Get into their Telegram groups. Interact with them. I mean, just because it's a pandemic doesn't mean that you can't have an interaction with, Mark Andreessen's on freaking Clubhouse, I mean, it's just like, find all the ways and, be, annoying without being annoying. I mean, I always respect when somebody is persistent. And I will invest in somebody because I go, damn, if they're that persistent and getting my attention, I should probably read what they have. Now, it better be good. Otherwise, it's just like, shit, you wasted my time with something that's like crazy. But no, I think you just have to go and build your own brand in the space. And the nice thing is, it's not as big of a space yet as like the oil industry or something like that. You can go from like totally unknown to like, total rock star. I mean, I got Sergey from Chainlink on his first panel, right? And so he knew what to do with the opportunity. He kind of grew it really fast. So.
Any other questions? Yeah, follow up?
I was just going to say, I guess I don't have to beg you since you're already aware of Secret Network. So.
Any other questions? Again, this is an amazing opportunity to have people at this level in the industry. So come line up.
I'm Felipe Castro Quiles. I'm from Genia, Latin America. Born and raised in Puerto Rico and back because we're redeveloping Roosevelt roads. My question to you, first, when you come with me to the Capitolio, we are creating a legal framework. We're creating a legal framework, and that's extremely important. What is your strategy for the creation of a legal framework and the ecosystem to sustain this community?
I'm not a lawyer. I look at other stuff and say whether I support it or not.
The ecosystem, if not law. What is your strategy to create an ecosystem to attract this talent and stay here? Not come here for 1 month or 2 months or 6 months and then leave.
I think Act 20 and 22 has done a pretty good job of having people stay here for 20 years, and that's when it expires for 22, and it'll be 20. I think even has extension beyond that. That's sort of for the founders, and then I think it's up to the founders to be able to attract people to come down here, as employees, and to also, you know, train, you know, I mean, Maya Juez has got a very good school. I mean, you know, just there's a lot of talent here, and reach out and find it. And, you know, I've got, you know, people that I've hired on the island. I wish I could hire more. You know, no matter what you're.
Other than that, because I think we're already working on the legal framework. And I'm inviting all of you guys, if you have something to put in that legal framework that we may meet, and this is for all of you, we're creating the ecosystem to attract this kind of talent and stay here. And use the local talent as well. I know that you know law, someone, right? I made it here very late. I'm sorry I didn't receive that. But can you please tell us what would you say? You can come with me to Capitolio, literally. Because I heard you talking to Pierluisi, for example, but you need a strategy to it's not only camera time. You really need some strong strategy to put in paper to then move forward.
I don't know what you heard or what you didn't. I brought up Singapore as a paradigm to copy off of. I brought up the drug companies that were the second biggest employer on the island for decades, and the ability to bring drug companies and other companies, non-crypto companies, back to the island with tax incentives is usually the way to do it. And I think the deadline under 2022 is 2035. So we have 14 years left of incentives, if that year's right, to continue to have this incredible energy with this incredibly diverse talent and incredibly diverse intellect base that creates jobs. I've hired people on the island. I hope to hire more. And that's always a function of the needs of a business. And I think tax incentives are the key answer to your question.
And I have gone down and met with, you know, it's been the same party in power now for three governors, mainly because one got kicked out and one was interim. But, you know, I mentioned before Pedro Piquerhen is the head of blockchain. And, you know, I've met with him several times. He's actually part of the film thing, but he's been given, and he's spoken at I do a conference every year on the island called Coin Agenda Caribbean. And we've done this 4 years. We do it typically every February or March. This year, because of the pandemic, we're going to do it in December, right after Art Basel. And you know, they've been very good at being able to. There is a committee that is investigating. I've gone to that to the EDD when it was under LaBoy. Now they got someone new, and he's moved to a new group. But there's still a lot of the same faces, and so I've given them a framework. And Bo Collins, I don't know if he's here tonight. He's on the actual committee to sort of study blockchain. What's weird, of course, is they asked me about the committee first, then they didn't ask me to be on it. There's 15 people on it. 10 of them are lawyers with no blockchain experience. But you know, they do have Andrew Keys on it from Consensus. They do have Bo Collins, so they got a couple legit, you know, blockchain people on it. And you know,
Michael, real quick, can you repeat Pedro's last name?
I'm not really good with. It's Pedro Piquer, Piquer, and
Excellent, thank you.
Yeah.
Piquer.
Yeah, Pedro Piquer. Yeah.
Thank you.
And I forget if it's Pedro Piquerhen or Pedro Hen Piquer, but I think it's Pedro Piquerhen. And he's you can find him on LinkedIn. He's first level connection with me. And you know, I offered to like bring Caitlin Long down to like talk to them. And you know, I've shown them the entire laws that they have, and you know, they're at least, you know, obviously we'll see. Pierluisi's only been in office for 2 weeks, but you know, I did talk to Pierluisi. I know you came in late here, but I talked to him in a private session with about 20 other people who were from Act 20, and I asked him specifically, "Will you support blockchain and cryptocurrency development on the island?" And he said, "Anything that is going to bring technology and new business to the island. We can't survive on tourism and agriculture alone." So, you know, when the cameras aren't off, I think he's pro-blockchain. You know, when the cameras get on, you've got the independence parties, and you got like, you know, the Citizens Victory Movement, and you got the whatever party's out of power loves to go and attack the party in power on like, oh, you're letting crypto crazies get here. They're going to take over the island. So, you know, politicians are called that for a reason. They have to be politically correct. But I think that, you know, we have the power. We're voters here. We don't vote in the mainland. We vote here. I mean, and we also have, contribution checks that we can give. I mean, be politically active on your own island if you're, whether you're a Boricua or whether you're somebody who is a new citizen, be active and make your voice known. I mean, there's 300-400 of us here, and this is our island, and let's make it the Singapore of North America.
Cut me a check. I can market better than you can, guaranteed. Not only can I market better than you can, we're actually going to fulfill on our marketing promises. Because when they come here, they're going to have a family. Make some noise if you feel like you're a part of a family here in San Juan. So get on down here. I'd like to thank my special guest, Mr. Keith Jensen. Let me give a round of applause for this brother right here. I'd like to thank my other special guest, Mr. Michael Terpin, Don Corleone, the Godfather himself. I'd like to thank my technical partner, my friend, my cover, and one of the most honorable people I know, Mr. Luke Stokes. That's him, by the way. You keep asking for him. That's him. And I want to thank all of you guys, man. Give yourselves a round of applause. You guys looking good out there today, man. Let's give a round of applause. We have an opportunity. The opportunity is real easy. We have an opportunity that exists within our community and within our society, where we sit right now in history that's unprecedented. Because of the things that we're aware of, that 99% or so of the rest of humanity is unaware of, but we all understand is something that they will all be a part of, we have an opportunity to shape, mold, and design our future. And we have an opportunity to build it together. So I want to invite all the rest of you to come build with us, come hang out. That's all the time I got for you guys today. Thank you so much. I'll see you guys same time, same place next week. We'll see you next week.